Today we're taking a look at ASX listed stock Argosy Minerals, ticker AGY, performing some technical analysis and making some predictions on where we can expect to see Argosy go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. As I mentioned, today we're looking at Argosy Minerals Limited. Their ticker on the ASX is AGY. This is another lithium junior. It is one of those companies which has multiple lithium projects that they are currently developing and hoping to obviously mine in the near future. They've currently got a 77.5% stake in a lithium project within Argentina. They can earn in up to a 90% stake. Then they've also got 100% ownership of another lithium mine over in Nevada in USA. So they've got a lot of potential, and certainly for them, lithium is hot at the moment. It's high demand, and these are the sort of companies that you should be looking to get into if you want to take advantage of the battery revolution that is coming right now for us, and there's literally nothing we can do about it. This is going to be one of the most in-demand resources within the next few years. But today we're simply performing some technical analysis and making some predictions based on it on where we can expect to see AGY go in the near future. So without any further ado, let's jump straight into today's video. Welcome into the AGY chart, guys. As you can see, we are currently sitting at a value of 40 cents right now, and we just hit an all-time high back on the 17th of January 2022, and that all-time high was 45.5 cents. That is really fantastic, and as you can see while I'm zooming out, they have had a absolutely fantastic run over the past year or so, really riding the overall lithium hype and certainly taking this to brand new highs. One interesting thing I'd like to point out is there is a recurring pattern when it does come to this stock in particular, and that is the cup and handle pattern. The first time we see it is just over here, and we can see it, and it's quite large, so it's quite easy to pick out. You can see the cup forms itself here, the handle then forms itself just to its right, and then we basically see a breakout of that handle and a continuation in an upwards direction. That pattern has just recently repeated itself on a smaller scale, but at higher values. As you can see, we had a cup which had basically formed itself from the 8th of November all the way through to the 5th of January. So very, very recently, and you can see the cup formed itself in this manner, and the top end of the cup on both sides was the exact same value. It is 36.5 cents. So you see that cup's formed itself, then the handle itself isn't as apparent as last time, but we did see a dip when this did occur, but then we saw a nice little breakout, and that is where we had our run to our all-time high. So all in all, quite interesting on face value, but right now we are in uncharted territory basically, and as a result of that, I really want to put in place, I suppose, a few key points of resistance and support. Firstly, I'm going to put in our first major support point, and I'd suggest it's at about 38 cents here. And the reason being, look at the price action that we have seen, I suppose, within the last few weeks, or the last week or so. The price action has resulted in 38 cents being not only a breakout point, but a key point of support 3 times over. And today you can see we even bounced off that once again as well. Next, where is our key point of resistance? Well, there's not that much room to move, but I would suggest that there could be a bit of resistance right here at the 40 cent mark, just purely because it has been a spot where we have seen closes on multiple occasions, one here, and today another here, another there as well. So 40 cents, probably more of a psychological point of resistance for us at this point in time. But after we break through that point, realistically, we are onto those all-time highs. Once again, all-time highs at 45.5 cents. That would be the ideal scenario for us. Now, based on what's currently happening, what are we seeing? Well, the 20-day moving average has crossed above the 50-day moving average, and that occurred on the 7th of January. So not too long ago as well, and also basically the day we saw a nice little breakout occur. Currently that 20-day moving average is sitting at 34.9 cents and the 50-day is at 30.8 cents, both rising nicely. And of course our 200-day moving average as well, just for reference, is at 18.6 cents. One thing to note is the volume you have seen probably over the past couple of weeks has been more significant than normal. We were having a consolidation of volume occur before we started to see the spike on the recent run we have seen. So it's showing that there is a bit of focus, a bit of momentum behind AGY, but once again we are starting to see a slight decline in the volume over the past week or so, and that is as we start to see the price pull back a bit. And to me that indicates that there aren't actually that many sellers. People aren't dumping their shares for a profit. It's likely just simply the traders jumping out when, you know, we hit a point where I'd suspect when we check the RSI is either overbought or close to being overbought. So let's check that indicator right now. And the RSI, as you can see, yes, was in fact overbought for a period of time, getting up to a maximum of 76.54. We have now had our slight sell-off occur. We got down to a low of 64.42 and we're now sitting at 66.45. So we're in the acceptable range between 30 and 70 points, but obviously we're still on the higher end. But given we've dipped back into it and given that you can see we can sit in that overbought range for an extended period of time, I wouldn't be surprised that if we see tomorrow a breakout back above our 40-cent mark of resistance and start traveling back up towards our all-time high, and that's sitting at 45.5 cents as I've mentioned in the past. Let's have a look at the MACD as well. Chuck that one on. Here it is. As you can see, nice green period here. We obviously had the cross back at the bottom of our cup, and that was on the 15th of December roughly of the 12-day EMA crossing above the 26-day EMA. It did almost look like it was going to cross back down again, but it did not. Right now it's looking like the 12-day EMA is moving back towards the 26-day EMA. I do suspect if we do see a cross of that occur, we will start trekking downwards, but they still have a bit of distance, and certainly I'd suspect a few days before we see a cross of any sorts occur. And if we can see a bit more buying momentum come in and start to, you know, travel up, then I do suspect that we won't see a cross occur as quickly as anticipated. Now, what is the worst case scenario for us if we do see a cross of the 12-day EMA below the 26-day EMA? Well, simply put, I think we will definitely see this support point here at 38 cents, but worst case scenario, I'd suggest that we'd probably be dipping down to either 35 cents or even just slightly lower to this point of 34 cents. And I'm actually more inclined to put it on 34 cents because there's more days that we have seen, you know, these key points touching. Plenty of price action here. Even if we dropped it slightly lower down, I'd be saying, yeah, about there, 34 cents. Slide that one down. There we go. As you can see, all the way across, we've had plenty of price action at this point. So that is, I'd say, our most major point of support on this chart at this point in time. That could come into play should the MACD cross in a downwards direction. But at this point in time, until a cross does occur, it does look like we are seeing a little bit of momentum come back in, but I think it is time for a period of consolidation. What we're seeing here that I've drawn, that is best case scenario, but I would not be shocked to see either a bit of sideways movement or when the MACD does eventually cross this point of support broken at 38 cents and a dip downwards. My target though for today's video is try and test those all-time highs again. I think it is feasible, but just be cautious, just watch the MACD and see what the volume does. That wraps up today's analysis on AGY, guys. I'd love to hear your thoughts on it down in the comments section below. Of course, if you did enjoy today's analysis, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.